Good morning, everyone, and welcome to the Blockchain Meetup by Hipther, our virtual quarterly meetup on everything blockchain, featuring experts and innovators from the space. So today we'll be discussing the evolution and the very nature of DeFi. It's growing up, but can it stay decentralized while becoming compliant? And we have our experts with us to guide us here. We have Dr. Dean Rakic, CEO and Chief Scientist of Blockcontrol, Professor at Rome Business School and EUBS. We have Thomas Giacomo, Head of FinTech at Teranode Group. And we have Andrei Cosma, Partner at BACIU Partners, ranked by Legal 500 as Next Generation Partner, Regulatory Lawyer, iGaming, Tech and Media. So, gentlemen, to start things off, would you like to take a few minutes to introduce yourselves to our audience, please?
Yeah, sure. Because you introduced myself as the first, because you already mentioned that normally I come from the academia side and from the some blockchain world, such a more than 12 years ago already. And at the moment I'm at a Blockcontrol. We developed a completely new consensus protocol, which are layer 0 and with completely new features that actually bridges traditional centralized world and all blockchains that already exist. So it's pretty new technology. There was already some Hipther introduction about the complete protocol and technology. And I'm really, really happy and glad to share some knowledge with colleagues from the same branch and from same area. Thank you.
Thank you for joining us. Thomas?
Yes. So hi, my name is Thomas Giacomo. I'm head of the FinTech department at Teranode Group. Teranode Group is a consortium of blockchain companies, and we are active at different layers of the technical stack from node operator to platform layer to application layer. And my area is on the FinTech side. So we have companies all using obviously the blockchain technology, active on the remittance markets, on the financial derivative market as well. We have an identity component applied to the different financial verticals. And my experience so I started my blockchain journey more than 8 years ago now, and I've been involved in different projects such as a banking compliance solution, but also I worked at a layer one blockchain, and I was in charge of the open source roadmap.
Thank you, Andrei.
Hi everyone, pleasure to be here. My name is Andrei. I am a lawyer with BACIU Partners, which is a law firm based in Bucharest, Romania. We specialized mostly on regulated industries such as gaming, fintech, and of course, in the last few years, crypto became an area of interest for us. And I know that we are also going to discuss today about laws. I will try to be as concise and as unboring as possible.
Great. Thank you all very much. So for the introduction. So we have experts to discuss both the technical aspects and growth as well as the compliance aspect. And let's kick off directly and check DeFi as it is right now. It is no longer just a playground for coders or cyberpunks. It's entering its regulated phase, regulated territory. And what are the key shifts you're seeing in how infrastructure is being built to meet compliance expectations, but without losing its core benefits?
Who will be the first?
Okay, let's see. Would you like us to start with Thomas and speak from his product and enterprise angle?
Yes, sure. So I think it's a very interesting topic. So in the DeFi, I think is evolving from experimentation to become a critical financial infrastructure. And if we take requirements coming, so compliance requirements coming from MiCA, for instance, MiCA requires the underlying infrastructure to be real-time auditable and to be real-time compliant, and not to have periodic reporting, for instance. On our side, and I would like also to share our experience on that, we have some miners and node operators as part of our group. And one of the requirements that we have to comply, so that the infrastructure complies with MiCA, is to make sure that first we are highly scalable, to make sure that all the transactions are auditable, verifiable, and so on. And also to have 99.99% uptime, so that we are sure that to comply to the MiCA requirements. So I think we see a world where of all the application and the FinTech application, for instance, will focus on user experience, but also market expansion, and that the core infrastructure component will make sure that we embed core compliance capabilities to ensure compliance at scale. So I think this is one of the implication when it comes to be aligned with compliance requirements.
Okay, so we have entered a very tangible phase. Andrei, from your point of view, in terms of legal and regulatory nuance, Thomas already mentioned a few things, what they need to do to comply with MiCA. What's your point of view on the question?
So basically, as Thomas was saying, we have two main frameworks that are relevant here. One is MiCA, which in simple terms tell crypto providers how they should do it and how they should act. On the other side, we have the AML regime, which basically answers the question of who you are, first of all. These laws, if we are putting them one together to another, we are speaking about literally hundreds of pages of regulation. It's like a novel. But, I like this saying, I think it's from Einstein or something, that you don't really understand something if you're not able to explain it in simple terms. So I think that for your question, a relevant observation would be from an AML perspective, in the sense that AML needs to address who you are. And here, I think that the legislation is quite flexible because it allows also for DeFi the logic where users are identified of what is called point of entry. So basically, I am identified when I'm entering into the network, but then DeFi can work based on the protocol that makes it a reliable technology. And that's why also I can tell you also from a local implementation perspective of what we have in Romania, which is aligned with EU, AML tackles the identification of people at the entry point. And this can, from my perspective, continue to accommodate what MiCA, what DeFi proposes, basically.
Okay, thank you. And Dean?
Yes.
What do you think?
From my perspective, as already Andrei and Thomas mentioned some points of that, I will just add just a few points from a pretty more architecture and technical perspective, probably, that will fit in this story. As a first, from my point of view, there is a big move from something that we are already still in the practice calling anonymous liquidity tool, to something that we can define as identity and policy where rails, so to say. And even though that pure DeFi is still largely out of the scope of the MiCA, because no matter how many pages we still have to go on and go through and to read and to accommodate, actually more than the surrounding services, custodians, exchanges, stablecoins issuers are being pulled actually into the MiCA style licensing and through the disclosure and supervision. that already to the ESMA regulatory points that defined. And at the same time, the expectation of something that we are calling on a travel rule or anti-money laundering AML for virtual assets are now crystal clear. So that's the kind of the big move and the big shift. And the second, maybe I will have some more, but second point I will go to mention, there is something that it comes from the data custodian layers from the technologies, and much more shift to the layer 0 without having a hard and heavy technology involved in the process, especially when we are talking, as we now need much more part of the points to interoperability between, or in case of different stakeholders and different systems under the different services that we need nowadays into DeFi to have. And much new protocols should be, or some protocols should be redefined for the transactional processing to give clear, immutable record of who controls which data, how it moves across the chains and the legacy systems, and how it's verified and audited. The few years ago, we had just one question: who owns some data? But now we have to spread a little bit more on the auditing part and the auditing side. That means for the regulators, they can actually trace a responsibility and a data lineage between DeFi stack completely. For instance, for the FinTech, as the Thomas already mentioned for instance, for the banks and the FinTech world, it means that we can now, we are much more be able already to plug a DeFi style settlement or liquidity at all into core systems without losing oversight of customer data, or with risk rules, jurisdictional controls, and such kind of things. And for some kind of other industries, for the healthcare, or maybe for the gambling operators, which are much more in the point in the last few years, online gaming and online gamblers, for their operators, they already sit in one of the shortest AML and responsible gaming environment. And it means that we can now use on-chain rails, but keep a consolidated view of player identity, affordability, and source of funds on a compliant backbone. That's very, very important for that. And maybe just one more point that to mention for this question is what we are seeing. We are seeing actually now real world workflows. That means cross-border payouts, loyalties, in-game assets, risk checks, and all that need to be re-implemented on top of this more accountable infrastructure that DeFi rally on. In some terms, that means we need to keep the data and business logic where it belongs. No matter if it is banks, operators, healthcare, some institutions, whatever, without losing some automation and data control. That means DeFi is in a position to take care about shared, auditable records and pushing everyone onto the same chain. That's the point. And it's not just one more point, sorry. The DeFi should be used not, or something that we can call code is law. Now is becoming a data custody is law, actually. And that is what makes it investable for FinTech, for healthcare, for the online gaming, for the institutions, for any kind of the industry, no matter where use case we have to push the blockchain technology inside. But from another point, it is acceptable for regulators and licensed operators. That's from my side.
I see. Okay, so combining accountability, but without losing the true character of DeFi. And now you've all touched on the subject of identification and for AML and all that. And regarding zero knowledge proofs, they were once seen as tools for privacy absolutists, but now they're being used to enhance regulatory compliance. Identity verification, secure data sharing, and what's the most promising application of ZKPs that you've encountered or worked on recently?
Maybe I can follow this question already, because the zero knowledge proofs have already graduated from such kind of an academic curiosity, so to say, to a compliance and partnership tool. Actually, we can combine it with different technology, different layers, and different tools already. And the much more point is the value of the proposition that becomes very tangible on the zero layer knowledge, or completely on the layer zero. Because why that is very important. At the layer zero, it's an infrastructure layer, and that is the layer where the data actually exists. All that we are performing actually pass through and validated through some kind of infrastructure point of the layer zero. It's a point of the data ingestion, and we are carrying on data always through the zero layer, no matter which source we have. For instance, again, for the regulators, because much more focused at some kind of last period, the regulators can now, to the layer zero, and having a knowledge proofs on the zero layer, they can get a mathematically verifiable answers to questions like, is this customer KIC'd? Does it already pass through the KIC point, because it's mandatory? And now it's up to some recent period, it was not so easy to determine if the KIC regulated or not regulated, if the KIC are technically supported by all of these stakeholders in the world of the blockchain, no matter which industry we are talking about. Or when we are completely on the crypto side, for instance, where the blockchain technology has a core, is this or some wallet linked to a sanctioned party or not? Or if we mentioned a gaming, for instance, online gaming, no matter if it is a responsible gaming or whatever, is this player which is appeared on the gaming platform over 18 and within their limits or not? Plus an immutable audit trail at layer zero without needing to see raw data itself. That's the point of the layer zero technically. For instance, again, for the banks, we can open DeFi-based products or embedded crypto features to onboarded clients, but never broadcasted their levels where are they on the chain, no matter layer 1, layer 2, or whatever. And we can see the proof and the risk score without passing the different scan through the layers for different stakeholders. Then with this kind of party, we can satisfy completely KIC and AML rules. There is a specific pattern of monitoring that we can catch, affordable, and check it directly to the zero knowledge proof on the layer zero, directly by on the where the data existing, with still offering a smooth, privacy preserving experience and multiple brands of jurisdictions, no matter. Because the KIC should be a raw, not always just to take some behavioral data, but staying on that level, we can have much more insight what happens actually with all stakeholders, all transactions that goes through different stakeholders. And plus, the zero knowledge actually let us move trust, but not only the raw data. That is something that unlocks the cross-border DeFi, for instance, what we mentioned already, completely transactional DeFi business, and at the same time, not to blow privacy or compliance.
Which is the main thing we want here. And Thomas, what is your experience from Teranode and your products?
Yeah, so I think it's aligned with what Dean just said. I can take the example of one of our company which is active in the remittance field. So remittance is cross-border payment when you send money from one country to another. And obviously, for cross-border payments, one of the issue is KYC, AML, and travel rules checks. So you have to make sure that when you receive money, that the KYC has been performed, same for AML, and the travel rule information has been transmitted. So this process, depending on the jurisdictions, can be either costly or slow. And that's where zero knowledge proof can play a role, is that instead of just redo the entire KYC, or you just check a cryptographic proof that the KYC and the AML has been done, so that you can proceed with the cross-border payment. So this is just an example about what has been shared by Dean. How to apply zero knowledge proofs for to a specific example, a specific use case on the cross-border payment side.
Okay, this makes sense. Thank you. And Andrei, from a regulatory point of view, the regulatory requirements, how does ZKP reconcile with data protection and regulatory requirements?
Basically, there is a two-sworded situation here. From a data protection perspective, ZKPs for sure present an opportunity. Mm-hmm. Because we have this core principle under the GDPR, which is called data minimization, which basically sets forth to collect as less data as you can for the intended purpose. So as Dean was saying, since we are speaking about mathematical proofs of identity, of minimum age, or so on, we are fully in line. ZKPs are fully in line with this core principle of from the GDPR. In the same time, we have a challenge coming a bit from the AML side and going in basically other areas of law, because besides identifying who you are, AML also requires reporting entities, how they are called, to keep proof. And this obligation to store data may vary from one jurisdiction to another. And I can give you an example. For instance, in our local legislation, it says that when you do the KYC, you need to retain documents for a certain period. And those documents cannot be retained in any kind of form or shape. So it cannot be pure data, right, as ZKPs. They need to be documents that are basically admitted in case of a trial, in case of a court thing. So now we are moving from the AML side to the particular rules that every country might have on litigations, for instance. And in litigation, as you probably imagine, the framework and the legal framework is very principle based on standard old principle that makes sense, but not that much on technology. Mm-hmm. So at this point, I was trying before our talk to, find a solution, but at least from this particular perspective of providing proofs that are admissible in case of litigation, I don't know that ZKPs at this stage at least can meet this standard.
So they will not be adequate. Yes.
Exactly.
Mm-hmm.
So maybe I add just one. Sorry if I'm not interrupting you. Just to follow the Thomas and Andrei following about the ZKP. It's actually that need to mention in this point, the data never leaves the trusted domain, and the only ZKP proofs and custody events move through this point. TechEP let us share, as the Andrei mentioned, documents. That means answers, not the data, only the raw data. That is exactly what regulators and operators from any kind of industry have been waiting for. That's something that we step forward with some kind of zero knowledge proofs.
Okay. I don't know if, Andrei, you want to add something to this.
No, it's a very good point. This challenge is more coming from the fact that, as I said, rules on litigations might vary. Mm-hmm. For instance, a challenge that has always been posed by the AML framework on this admissibility in court is basically the procedural rules about admissibility of proof in case of documents. In our legislation, it's something what is called like a certified true copy of a document. So having a certified true copy of a document as a principle means that somebody needs to see an original document, right? Because that's how you can certify something it's a real copy. But actually, practically speaking, and also in my experience, this cannot happen. We are all somehow, at least partially living in a digital world. So it's not like I'm opening, I don't know, a FinTech account or something like this, and I'm seeing anybody in person. So again, this is something that we're always gonna face. Legislation is always gonna be one or even more steps behind of what's happening in the real world. And that's how reality works. It cannot, anticipate what's gonna happen.
Yes. True. And sorry, speaking about this side of things, we had a question from LinkedIn from Annie to Thomas. Which aspects of MiCA, because you started by mentioning MiCA, which aspects of MiCA do not really work from your perspective, Thomas? And will we see soon MiCA 2.0, the second version?
Well, that's a good question. I think my answer would be, for now, MiCA is good enough. To bring a regulatory framework such as MiCA is already a very good clarification to enhance innovation, but too much regulation is not good as well. Of course, you can still find some default or gray areas, and I think NFT is one of them. Cross-border supervision is one of them. But I think overall, I think it is a good regulatory framework. Worldwide, it acts as a kind of reference in terms of overall digital asset regulatory frameworks. One of the things that I think we need to focus on, not only to improve MiCA, but also to link MiCA to other regulatory frameworks to cover the entire digital finance stack. And I'm talking about the link between MiCA and DORA in terms of operational resilience, or MiCA and AMLA to unify AML check. So for me, this is more important to make sure that the entire digital stack will be robust enough instead of trying to correct MiCA, because MiCA is already good enough. I mean, it's a great regulatory framework. And again, I think we have to always find the right balance between regulating a space to bring some robustness and not regulating too much to block innovation, right? So I think they found the right balance, and you can always find something to improve, but the scope is already big enough. The number of countries involved is big enough. So I think for now, I would move forward to create on top of MiCA instead of trying to fix some of the gray areas of MiCA.
Okay, thank you. And thank you, Annie, for the question. Now, another thing we have seen is that there is a growing modular approach in DeFi. Protocols are being built like Lego blocks with interchangeable KYC models, auditing layers, etc. Is this modularization helping or complicating compliance efforts? And Andrei, can you please start with this?
I think that here again we might have a challenge, because one of the core pillars of MiCA is that the licensed provider, it remains ultimately responsible if it's outsourcing certain functions. So here, from a legal standpoint, we are talking about a liability issue, right? So if we are doing this modular thing, then it might make sense for scalability, but in the same time, the entity which holds the MiCA license will remain responsible for something that they might not do themselves.
Mm-hmm.
This is something that generally happens in all regulated industry. If you, and I don't think MiCA here introduces anything new. If you have a license, it happens in gaming and happens in banking and so on. You are basically responsible for what happens under your roof. So that's one thing. The other thing with the modularity, MiCA also, and I agree with Thomas, I think that it's a good step that we are going, and it's a reference worldwide. But MiCA focuses on EU kind of presence, and modularity sometimes means that you are externalizing, outsourcing, however you want to call it, a function which might not be based in the EU, and again, which might raise issues with from the perspective of observing it. Yeah.
Okay. And Thomas, how do you think this affects developers and enterprises?
Well, I think it's definitely a good thing from an enterprise and developer perspective, in the sense that in the past, if you were an enterprise, you have to almost rebuild the entire tech stack from scratch to make sure that it would meet some regulatory or compliance expectations. And now, as an enterprise, you will reduce the integration cost, choose some modules who are already aligned with some regulatory requirements. So from an enterprise perspective, it's more flexible, and the costs are lower, in the sense that you don't have to kind of rebuild everything from scratch. It was not exactly like that in the past, but still, from a developer's perspective and what we experience in our day-to-day life, it's also a good thing in the sense that they are able kind of swap some module to another, depending on either the jurisdiction or the use case, and they will be able to choose the ready or plug and play module that meets some specific expectations when it comes to specific jurisdictions. The challenge or the challenges that we see is interoperability, because obviously it's good to be able to swap modules and to make sure that each module would fit either use case or specific jurisdiction requirements. But obviously, if you try to have many modules, the interoperability between the modules might be an issue, and either within a specific chain or in between different chains, right? So that I think that the standardization aspects is definitely one of the most important topics in order to make sure that we would address the interoperability challenge.
Thank you, Thomas. And also interoperability is something that Dean has highlighted since last year at Hipther events as well. And I wanted to ask, in terms of innovation and design system, what is the perspective on this modularity trend?
Yeah, the modular Lego DeFi, as you mentioned already, is the kind of approach which is very familiar to anyone from the enterprise world, as Thomas mentioned already. And we bundle services actually and specialize, and we plug things together in this point. And especially when we're talking about a DeFi, that means a separate modules for KYC, for the risk, for the analytics, for the custodies, and so on. That's about a modularity and kind of Lego distribution of the points. And from a business and the compliance perspective, this is actually a powerful. Only in the moment when if the entire system shares a common data and so-called accountability layer. That is a modular approach of the DeFi with a pluggable KYC analytics, auditing, and so on. And this could be and comes very powerful, but only if the entire system, as I mentioned, share a common data custody and interoperability substrate. In my last protocol that I already published and pushed on the market, it's called actually interoperable blockchain data custody protocol. It actually merge all these parts from different kinds of worlds, no matter if they're already from the encrypted world, no matter which blockchains exist from one side, and another side is a traditional world, actually the centralized world that we have in all kinds of industries in our lives, no matter which kind of source. And it should provide a canonical chain agnostic way to represent and transport transactional data actually in the moment, including its provenance, access rights, and audit requirements across different blockchains and legacy systems in the same time. That's the point. And all that actually this kind of Lego definition, a higher level modules from the KYC, AML screening, risk engines, reportings, can plug and consume the same custody and metadata model. Because from the lower level, when we are going up with the data and transactions through different levels, we need a metadata to transfer between them and to satisfy the interoperability. This makes actually a composability an advantage that we can upgrade or swap a KYC providers without breaking any regulatory view from the end-to-end point. That's from one side can become a compliance nightmare when we have such a Lego distribution and modularity and plug and play things. But why? Because every module speaks its own language and nobody owns the full picture what happens in the system. And as we mentioned already, the blocks are wired into a single cryptographically managed and auditable system. That's the point that redefines transparency, traceability, and regulated, in most cases, a financial integration. Why? Because from another point, the crypto world used this point of the plug and playability on the market because we are still with this modular approach, such a kind of two faces or two-sided sword, and always one side expectable to have from one side and another side when we have regulators, compliances, and all the things that we need to fulfill and satisfy. That actually that we need to have an interoperability and understandability in the better way to say that different systems should talk to same language on the data transaction layer. That's the point of this plug and play. It's very nice, it's very good, but two-sided sword still.
Thank you, Dean. And I don't know if Andrei wants to add anything on this nightmare point of view of the modularity and the different modules. But we do have a follow-up from our member of the audience, Annie. She thanks, merci Thomas. She says, great clarification. And she has a follow-up to Andrei and Dean. Does it really always need cryptographic guarantees, or would simpler governance tools would also work? Andrei.
Regulatory-wise, I don't think the principle is necessary that only cryptography works. It's the trust level that should be sufficient, and now I'm going back to what I said before. Liability lies and is going to remain with that respective entity. But the advantage of cryptography is that you cannot essentially beat math. Mm-hmm. So all other kind of governance tools, while they might be permitted, it may create a level of uncertainty that cryptography might not have.
Okay. And Dean, does it always need to have cryptographic guarantees with simpler
Andrei
governance tools?
Already answered the most of the
points. Yes, most of it, indeed.
But, normally, the complete cryptography world is much more to prove the trust from some sides. Technically, we do not need. We have enough technology to satisfy all levels of data exchange and data transaction points, no matter which kind of data we have. And which amount of data, it doesn't matter. But the cryptography actually give a some kind of proof of trust between stakeholders, and therefore is at the moment, and normally we're approaching already the post-quantum era and the quantum cryptography that approaches, and already, because that's kind of some kind of trust that we need to fulfill between the stakeholders in the transactional processing, no matter which kind of data we have.
Great, thank you, and thank you, Annie, for the follow-up. Now to wrap everything up, let's say if you could redesign one part of the DeFi stack to make it truly enterprise or regulator ready, where would you start? Would it be identity, scalability, governance, or something else entirely? So let's start with Thomas.
I would say all of the above. I would start with maybe identity is a very important component, because at the end, this technology is about exchanging value, and to exchange value, you need to identify who is exchanging this value. So I would make sure that these identity components is aligned with international standard, and W3C are doing a good job to clarify what kind of standard do you have to comply to. Also to make sure that it's modular enough so that you can comply with different jurisdiction. And when if you take the example of the European identity wallet, you have to make sure that these identity components will be also aligned with the requirements coming from this European identity wallet. In terms of scalability, that's a topic that we worked on before, because indeed, if you really want to have real-time auditability, and if you want to have adoption, the scalability capabilities is a very important component. And obviously, you want at some point to decrease the reliability to additional layers, because sometimes they are centralized and you don't control the security audit or additional requirements for this additional layer. And then finally, in terms of governance, one of the topic that I think is not treated enough in the overall ecosystem is the governance of the open source roadmaps, because we need more. When I say open source roadmap, I mean the underlying layer 1 blockchains, and I think sometimes we need more transparency, clear governance mechanism, and sometimes it's not transparent enough, and and the governance is sometimes opaque. And I think we need also to make sure that from a pure governance standpoint, and we need to bring more transparency, more specific rules. The Linux Foundation has been very good in clarifying the governance mechanisms on the open source roadmaps, and I think we need sometimes to take example about what have been done in the past and what worked well, so that we can also apply and bring more transparency and more credibility to the underlying blockchains.
Thank you, Thomas. Andrei, what's your perspective?
I don't think I'm in the best position to argue how to redesign technology, but for sure I would redesign laws. Going to my previous point, where laws are always outdated by reference to technology, I think that what laws should do, and some of them are doing, for instance, Mika, as Thomas was saying, is to just establish principles, not go into that much of details about how the technology works. So we have some, as a society, we need to have some objectives: protect consumers, protect us against crimes, make sure that people are safe in this crypto environment, for instance, and then just work on those principles, but not put down too many rules that what they're only gonna do is just to delay technology, basically, or stop it altogether.
Very wise. Dean, hearing all this,
yeah, I agree with Thomas and Andrei. All that said as a part of the what should I do if I can, or if I'm in the position to redefine something or redesign, actually. If I ask myself, I already pushed some things on the redesigning, but if I can redesign just one part of the DeFi stack to make it a truly enterprise and regulator-ready, I would not start at the application layer at all. I would start at the data custody and interoperability, as Thomas already mentioned, that part that is very important, besides the scalability and other pointing points of the technology. Because today, identity, governance, and compliance sit on the top of the foundation that was never designed for long-term regulatory audit or cross-jurisdictions data control. And my point of redesigning this part of the world is actually the IBDCP protocol that I developed and put some kind of or a new idea to reverse that logic from redesigning some on the normal, natural way. First, to put in place the global data custody fabric that says not only who owns the data, but who controls which data, how it can move between the stakeholders and between the industries, and how it is audited across chains, because we have already so many chains, and from another side, through legacy systems. Then I will push to let identity solutions, governance frameworks, and scalables, for instance, DeFi protocols, to plug into the fabric instead of each reinventing on its own approach. For instance, for some bank or insurance company or insurer, this means that DeFi becomes another channel on top of the control, regulator-approved spine, not a parallel universe as we already have in the last period, when we have some new approaches or new solutions for anything that is connected to the novel technology, especially the blockchain or AI in the last period. Or, for instance, for the healthcare, that's very still hot potato when we are talking about the data and transactions between clinics, insurance company, and all other stakeholders inside of the healthcare industry. It means a kind of automation and new business model without sacrificing a patient or patient trust, actually, that is very important, and legal compliance from another side. So my redesign would be making something like a standard layer or a zero layer where we can build identity to approve scalability or to remove scalability, and governance on top of that, not the other way around or something kind of that. For instance, the biggest gap is not a new DeFi if someone comes up. It's a standard data custody and interoperability layer that we have to solve. That means we need to, besides that, as a key business message instance, it's not just to have a new application. It's, as Andrei already, maybe we need to change something in the law or some regulatory points or the compliance procedures. It's actually tuning everything into the extension of regulated infrastructure, not to be just a competitor on the market, to put that. And when we put that on the place, that means identity, governance, scaling need to be or to become much easier to align with regulators and any kind of the boards that need to make a decision.
Makes sense. I don't know, gentlemen, if there is anything else you would like to add to close, but these answers definitely covered the questions. We're all good. Do we have any more questions from the audience? No? Okay, great. Thank you very much, Dean, Thomas, Andrei, for your time and valuable insights. Now, in terms of Hipther virtual events, stay tuned because next month, December, we speak for cybersecurity during the cybersecurity meetup by Hipther. And blockchain meetup by Hipther will return in early 2026. So make sure to follow us to get all the updates. And if you have any questions, we will also share the recording of the video. So please feel free to comment and reach out to our speakers on LinkedIn, connect and ask your questions. Thank you all very much. Have a great day.
Thank you.
Thank you. Bye-bye.
Bye.
Bye.